Welcome to the Cyber Insider, Emsisoft's podcast all about cybersecurity. Your hosts today are Brett Callow, threat analyst here at Emsisoft, and I'm Luke Connolly, partner manager. Today, we're pleased to have Sezaneh Seymour as our guest. Sezaneh is the vice president and head of regulatory risk and policy at Coalition, a leading provider of innovative cyber insurance and security services. For nearly 20 years, Sezaneh has held various domestic and foreign policy roles at the nexus of national security, emerging technology, sustainability, and trade. She served as the Deputy Assistant U.S. Trade Representative at the Office of the U.S. Trade Representative in the Executive Office of the President, where she was responsible for negotiating and enforcing trade agreements. She's the former senior advisor to the Deputy Assistant to the President and Deputy National Security Advisor for Cyber and Emerging Technology on the National Security Council. Prior to these roles, she served at the U.S. Department of the Treasury and at the U.S. Department of State. She's a graduate of the National Defense University's Eisenhower School and earned her Ph.D. from Virginia Tech, where she remains on faculty. Welcome, Sezaneh, and thanks for taking the time to join us today.
Thanks for having me.
Maybe you can start by talking a little bit about Coalition. How does it differ from other insurers?
Sure, that's a great place to start because I'm sure a subset of your listeners are probably wondering why you chose insurance as a topic. So I'm really excited to help you tell that story. Coalition is one of the largest cyber insurers. And I can't really tell our story without also talking about the evolution of the cyber insurance market broadly, because in a lot of ways, we're leading that shift. So let me just first acknowledge that cyber insurance has had to evolve pretty dramatically to keep pace with the realities of cybercrime. And today, the most advanced insurers are combining security technology with traditional financial risk mitigation. So we use technology to assess an organization's risk posture at the time that they seek a policy, as well as throughout the life of that policy. So, we continually monitor policyholders' risk, and we even help them mitigate vulnerabilities. So I'll give you an example to illustrate how our model works in practice. Most in the security community will be familiar with the Citrix Bleed vulnerability. So last year in October, Citrix announced that vulnerability, and they also issued a corresponding patch on the same day. That very same day, Coalition scanned our book of business, and we notified our affected policyholders that they were affected by that vulnerability. And in some cases, we helped our policyholders actually patch their systems. About a week after that announcement, Citrix reported seeing that vulnerability exploited in the wild. And then roughly 4 weeks after that, CISA released an advisory. So what that means, getting back to how we're different, what that means in practice is there's some subset of our policyholders that may have avoided a business disruption because we effectively supplemented their security and contacted them. So they patched a full 5 weeks before a CISA advisory went live. And that's really how cyber insurance has evolved, right? Insurance is now as much about bolstering resilience to avoid disruptions as it is about helping businesses recover technically and financially.
What changes have you seen over the last 12 months or so in the threat landscape, and what do you expect to see moving forward?
That's a great question because the timing could not be better. It's report season. Insurers have a unique perspective in that we see how threat actor behavior results in real harm. So I can offer some data on trends, and I'm happy to also give you the source for that data in case you want to make it available to your listeners. So I won't cover everything that we released, but we have a number of stats from 2023. The top line, sort of in a nutshell, as they say, is 2023 was worse than 2022 in terms of both the frequency and severity of digital crime. And insurers measure that, of course, in terms of claims. And there was a year-over-year increase. We did observe that there was a drop in frequency and severity in the second half of 2023. So the year ended better than we began. And interestingly, the severity of claims dropped by over half in the second half of the year. So severity is how we measure like loss or damage from claims. Some other kind of interesting stats is that more than half of claims really began in the inbox. So these were typically business email compromises, fraudulent transfer of funds. And I raise this because I think it highlights the importance of email security, as a key element of our risk management, especially as we move into a universe in which like artificial intelligence will make it even harder to detect phishing through awkward phrasings, misspellings. I also have a stat, which, Brett, you're going to be excited about, I'm sure, for what percentage of our claims in 2023 were ransomware. Do you have a guess before I give you the number? This is your pop quiz.
25%.
25? Okay. Luke, any?
Of cyber claims?
Of ransomware, of cyber claims, like what percentage of all of the claims from 2023 were ransomware claims?
20%.
Yeah, you were the closest. It was 19%. So 19% of total claims in 2023, but historically, that's also the largest source of, again, what we describe as like a severity or like loss or damage. We also release a lot of granular stats about other observations. So this is less about trends, but maybe more interesting information, and we can get to that a bit later. I need to make sure I'm citing it correctly, but we observe that businesses that use certain technologies, vendors, and boundary devices with known vulnerabilities were more likely to experience a claim than those that did not. So, for example, and these are all in our claims report, but those with internet-exposed Fortinet devices were twice as likely to experience, or 2 times as likely to experience, a claim in 2023. Policyholders that were using internet-exposed RDP, or remote desktop protocol, were 2.5 times more likely to experience a claim in 2023. In fact, our research teams observed that threat actor traffic scanning for RDP grew in 2023. Our honeypots detected a 59% increase in unique IP addresses scanning for RDP between January and October of last year. Similarly, we found that those with internet-exposed Cisco ASA devices were nearly 5 times more likely to experience a claim in 2023 than those without. And that's one that our security researchers discovered that a particular ransomware gang was actively exploiting a vulnerability that was known from 2020, and that has continued into 2024. So I'm happy to make all of this data available to you. There's more. I'll show you a link. It's just an interesting report to look through.
I'm not sure if I should be encouraged or disheartened by an insurance company which is maintaining honeypots to find out what the threat actors are doing in the wild. But as you say, we seem to be facing more threats than ever, with major cyber attacks happening weekly, it seems. So how did we get here? Should we have done something differently in the past? And by we, I mean like the cybersecurity industry and policymakers.
Yeah. So, as you described when we started, I'm a policy person by training. And so I like to take a big step back and sort of think about the broader landscape and the environment in which we're operating. And I think the best way to answer your question is just to, start by acknowledging that we, as policymakers, as businesses, as insurance companies, as the security community, we're navigating 3 concurrent realities. First, we have widespread digital vulnerabilities in old and new infrastructure, right? So like each of these is an unlocked digital window or door that criminals can breach. We have them installed across some of our most sensitive systems. They're in our subway trains, they're in our pipelines, they're in our power plants. We have sensors on bridges. And simultaneously, we are installing more in new infrastructure because we're building more products, smart by default, but not always secure, right? This is something that you hear CISA talking about a lot in the United States. And each additional insecure thermostat that we connect to the internet is just another potential vulnerability or another potential door that malicious actors can breach. So the second reality is that the majority of the infrastructure that provides our critical services is owned and operated by private entities. So that's, the reason that that's relevant here is each of those entities make individual cybersecurity investment and risk tolerance decisions. And those decisions are often opaque to policymakers and to folks on the outside. But the consequences of those private decisions are imposed on the public when critical services are disrupted. And that sometimes means that governments and others have to step in to mitigate the damage. And we saw this with Colonial Pipeline, we see this with hospitals. This is virtually in every single newspaper that we see these days. And last, of course, we know that threat actors leverage these digital intrusions to achieve their aims, right? They're accessible and profitable. They extract ransoms, they steal trade secrets. Malicious states leverage digital intrusions to advance their geopolitical objectives. And so back to the beginning, you asked, what should we do differently? And the answer is we have to accept that this is really the complex reality in which we're operating, and to move the needle, to really change status quo, policy solutions really have to address all three of these realities.
Do you think governments are now heading in the right direction? Are they doing the right things policy-wise, or should they be doing more or doing things differently?
Yeah, I love that question. I mean, this is a complex societal problem, and government certainly has an important role, especially when addressing market failures, which really only government can do, right? But others in society also have a role and arguably are in a much better position to move the needle. And I would say, especially now that I'm out of government, we shouldn't wait for government regulation to do it, right? So just as an example, let's begin with, an honest look at the technology, the quality of the technology that goes to market. Today, we place a disproportionate burden for the security of our technology on end users, people and businesses. So my husband's a software developer. And so I know just firsthand, not just from being in this space, but also being around him for over 20 years, that software developers often prioritize speed over security, right? In practice, this means that they sometimes ship software with known vulnerabilities to the market, to the same consumers that then install that software in some of our most critical systems. Those end users are often the least suited to take on that security burden. Cyber insurers see this every day, by the way. This is our lived reality. And that's why we've had to adapt our model to share the security burden with our insureds and alert them to vulnerabilities that potentially could result in disrupting their business. And we help them mitigate those vulnerabilities so that we can avoid incidents that become costly disruptions and claims. I raise this as an example because this is really something that at the moment is outside of the scope of government activity, and it would be far more efficient if all actors involved really worked to move policy and other like market measures to bolster our resilience rather than waiting for government to act.
When it comes to ransomware, some people think that insurance is part of the problem, the reasoning being that companies are more likely to pay if the money isn't coming out of their own pockets. What's your take on that?
Yeah, I've heard that a few times, as you can imagine. And look, it's not an unreasonable belief to hold, at least I think until you look at some of the data and understand the reality of cyber insurance today. I'll offer 2 points, a qualitative point and maybe a quantitative point. The first is I think there's this misimpression that once you receive a ransom demand and you have insurance coverage, that there's an automatic assumption that a ransom gets paid and reimbursed by the insurer. But the reality is insurance policies, cyber insurance policies cover ransom payments that are what we call reasonable and necessary. And so there's an objective assessment that that is very situation dependent, right? And it happens before there's a payment decision. It is the policyholder that drives that assessment, and interestingly, we've seen a willingness to pay decline over time. This is true both for coalition stats as well as stats that we see published across our community broadly. Many of these stats come from digital forensics and incident response firms, for example. But we are seeing willingness to pay declines. That's the qualitative point. And I can tell you, among our policyholders that experienced a ransom incident in 2023, 40% of those that fell within the reasonable and necessary category opted to pay that ransom. And then when ransoms are paid, at least for coalition last year, we dramatically reduced the amount paid from the original demand. Now, I think a much more compelling point is actually the quantitative point. So you framed your question in terms of the policyholder pushing to pay because it's not their money, right? They have insurance in theory. That's how the argument is made.
They just see their business being disrupted. Let's get on with it.
Yeah. But I also hear that insurers are the ones that are pushing policyholders to pay because that's sometimes the cheapest path to restoring operations, right? But there's extensive data that actually dispels this. So cyber insurers routinely incur much higher incident costs than the initial demand made in a ransom incident. So Net Diligence has a data set of nearly 10,000 cyber insurance claims across industry for over 5 years that ended, I think, early last year. And what that data set shows is that insurers end up spending far more on crisis response and recovery expenses. And so for ransomware incidents, almost half of the claims costs go towards indemnifying businesses for lost income. The second sort of highest bucket of funding goes towards paying for digital forensics and incident response, as well as legal representation for claims counsel. And I think taken together, I mean, ransom payments are much farther down the line. So taken together, I think this data shows that really a fraction of what insurers pay goes towards ransom payments. And that's precisely because insurance providers typically prioritize and fund strategies to avoid paying, all while driving resilience. So this is also a question that I'll say that has been examined by academics and think tanks, and they found that insurers are either paying a negligible or no role, or are actually driving resilience and are not driving ransomware activity. Also, by the way, this is not part of your question, but I think it's useful. The market penetration for cyber insurance is exceedingly low. So I think in the UK, it's like 9%. In the United States, stats kind of vary, but it's in the 20 to 26% range, depending on how you figure that out. So that's, it's still a small minority of US and European businesses that have, or North American, I should say, in European businesses that actually have cyber insurance coverage.
Do you think the insurance industry in general has done enough to help insureds improve their security posture? Should it have done more over the last few years?
Yeah. Well, I think cyber insurers have the incentive to continue to evolve and improve. So where we are today, we'll be stronger and better tomorrow than we are today, right? And that's because we, again, have the incentive to do that. So we want to assess a policyholder's risk profile as accurately as possible. And we want to help that policyholder become resilient to an ever-changing threat landscape. A few minutes ago, Luke was surprised that we run honeypots. We do that because we think it's in our interest to understand what threat actors are doing so that we can intercept their behavior by working with our policyholders to bolster their resilience. That's why the very best cyber insurance companies today look much more like hybrid insurance and technology firms. Criminals, threat actors are constantly evolving, and so cyber insurers must do the same.
You co-authored a paper last year about evidence-based cybersecurity policy. I have it here, really great paper, by the way. One of the findings was that organizations, and you mentioned it earlier, you alluded to some of the findings earlier, but organizations that use certain VPNs, for example, were about 3 times more likely to file claims than those which used other VPNs. How should information like this be used? Should insurers be steering organizations away from certain products or increasing premiums for those who choose to use them? Or like, what's the proper direction that the insurance industry should be taking with this information?
Yeah, thanks for that. So my partner, Daniel Woods, and I submitted that last year, and it was just published a couple of weeks ago, as you noted. So that paper, just for those that aren't familiar, is a meta-analysis of other studies that looks at the effectiveness of security controls. And one of our inclusion criteria was to look for studies that actually look at real publicly facing systems that are exposed to real threat actor behavior. And so all of those studies measure the outcomes of that reality, right? So we have outcomes measured in terms of claims, in terms of botnet infections, and so forth. And yes, one of the findings from that meta-analysis is that certain manufacturers are associated with higher claims, for example. And I've just alluded to a new study that is not included in that we just released, that Coalition just released this year or this week, actually 2 days ago. Just taking a step back, we talked earlier about society just placing the burden of security on consumers of technology. While we do that, we also have to sort of recognize and acknowledge that consumers actually have little real way of comparing security across like products, right? So even if they wanted to buy for security, you often can't. They just don't have that data, but cyber insurers do. And we are beginning to know more and more because we collect vast amounts of data on security outcomes. And we use that data to price risk and policies. So I think you'll see the community make more of that information available because we want those that buy and use technology to be empowered with the same information that we have so that you can make better decisions and or at least understand the risks tied to the decisions that you make and the consequences of not patching and so forth.
Yeah, this paper was really interesting in that it highlighted just how little we understand which security controls genuinely make a difference and which don't. How can we actually build on this? How can we move forward to a position where we are creating more evidence-based policy?
Yeah, let me just start at the outset by acknowledging that this, people have asked me why this wasn't done, this research project wasn't done before. But this research really wasn't practical as recently as a few years ago. So if you recall the criteria that I mentioned that we used to select studies, real systems exposed to real threat actor behavior, a lot of those studies are recent. And they come from technology firms, academics, but many from insurers. Cyber insurers specifically. So we expect that body of public information research from cyber insurers will grow. And with it, I expect this kind of research and this kind of information will become much more accessible. You asked, how can we build on this? And maybe I'll take a liberty and sort of talk a little bit about the motivation. As you mentioned earlier, I was in the White House National Security Council. I should clarify is I was there for Colonial Pipeline, for Microsoft Exchange, for Kaseya, for JBS Foods, and on and on. It was really, 2021 was a wild year for security, sort of on the heels of SolarWinds. And one of our goals as policymakers, I looked around the room, senior leaders, this was top of mind for the president, like our digital security. And a goal was to encourage businesses to act fast, to bolster their defensive posture, so that they could be more resilient to malicious cyber activity, right? Not just from criminals, but from malicious states. And remember, this is like the height of like COVID. So, we held press conferences, we gave interviews, the Deputy National Security Advisor wrote a letter to America's CEOs, the president wrote to governors. We made good common sense recommendations at that time. But it would have been great if we could have just said, and here's a study, like, and here's why these types of controls are the controls you should optimize or elevate when you're making trade-offs. So this kind of research, I think, can inform those kinds of recommendations and even add a bit more granularity to help policymakers that are working on everything from, secure by design initiatives to the new trust mark, the U.S. trust mark label. We talked about trying to buy for security. There's a process to get a trust mark label out there to help consumers buy. So this kind of data and resultant research, I think, is not just relevant to policymakers, but I'd be remiss if I didn't note that boardrooms and business executives that are trying to rack and stack how they'll allocate the resources, human and financial, should find information like this available. And my hope is that the research community will build on it.
There's been talk about the need for a cyber insurance backstop. Can you talk a little about that? What is a backstop, and why should or why shouldn't we have one?
Yeah, I'll start with a bit of context. We've just spent the last 20 minutes talking about how digital risk is pervasive, and everything we do has a digital backbone, right? My CEO, Joshua Mata, often says, like, every business is a digital business, and that's really true. But that's also why more and more businesses are pursuing cyber insurance to mitigate the consequences, the financial consequences of that digital risk. And the cyber insurance, as I've also noted, is small, but it is growing quickly. Actually, it's projected to double in size roughly every 3 years. But because in part the sector is small, and in part because digital risk is pervasive, some have expressed concerns about the ability of the insurance sector in the United States. Similar debates are happening in Europe about the ability of the insurance sector, the cybersecurity insurance sector's ability to withstand a catastrophic cyber event. So think like, I really hate this phrase, but it does convey, think cyber 9/11 is what people like to say in the States. That's why the U.S. administration is exploring the need for a federal cyber insurance program to buttress the sector. So there are assumptions that any recommended program will include a financial backstop, but really there remain a lot of open questions as the U.S. government is still deep within the exploratory stage for what, should there be a federal response, and if so, what it might look like. Some of those outstanding questions include things like, what would the scope of any program be? What would it cover? Will it be a reinsurance mechanism? Is it intended to expand the scope of coverage in terms of absolute numbers of businesses covered, or in terms of limits like that are made available to individual policyholders? Is it intended to incent insurers to provide new kinds of coverage that they don't currently make available? So there are gaps. Many assert that there are gaps, like coverage for war is one that is raised a lot. Another is one that I described as the cyber physical gap, which is, if you think, I like to take the Colonial Pipeline example. If a threat actor hacks into the IT systems, jumps over to the OT systems, they could change the pressure in a pipeline, which might result in a physical explosion, right? That is, of course, a worst case scenario, but that type of incident would typically be excluded from property and casualty coverage and cyber coverage for different reasons. So that is a gap. As to your question, having said that, of whether there is a need for a federal program, we remain deeply skeptical. A backstop comes with significant risk. We're distorting what is really a young market. We have the potential to misallocate public resources, and if not structured properly, could actually drive moral hazard and in lots of ways, right? So all of these are reasons why, incidentally, past federal interventions in the insurance sector have only come after a market failure and not in anticipation of one. So like the terrorism risk insurance program or the national flood insurance program, or even like in the UK, Pool Re, those are typically created when, or because I should say, economic activity is stifled when businesses couldn't obtain coverage. But that's not the situation in which we find ourselves today. So, we're skeptical of the need to move out ahead of a market failure.
Wouldn't a backstop, any form of backstop, disincentivize the insurance industry from trying to manage risk better? Wouldn't it push that more onto the public, onto the taxpayer?
It could. Yeah, it could relax underwriting discipline. If a firm can simply, as you say, transfer the costs of insecurity to the taxpayer. But on that topic, we also talked a little bit about the new insurance model, right? How cyber insurers are actually driving resilience. So theoretically, if designed appropriately, I mean, a federal program, a backstop could adopt elements of that active model, right? Requiring baseline cyber hygiene measures and potentially push organizations to improve their hygiene. But the devil is in the details, as they say. It's, there's a lot to be worked out.
It's clearly the responsibility. We talked a little bit about this. It's clearly the responsibility of businesses to act on their own to protect themselves and to be informed to protect themselves. But as your study said, effectiveness of cyber controls is driven by how a control is implemented, more by a binary yes/no of whether it is implemented. And this raises a key point for many, if not most, small businesses, which is that they don't have the expertise to adequately implement cybersecurity controls. So my question is, how do we close that gap between what businesses have to implement and their lack of technical expertise to follow through with the implementation?
Yeah, I think the answer for that will depend on well, no, I shouldn't say that. There's a very clear, easy answer, and then there's a it depends piece. So I expect that, just coming from the perspective of a cyber insurer, I expect that cyber insurers will continue to make sanitized granular data widely available to the public about what we're seeing in terms of the relationship between measures that you take and your likelihood of being disrupted. Digital forensic and incident response firms are similarly releasing a lot of great information in this space. But you talked about the complexity and needing to have a team to help implement your cyber, or manage and mitigate your cyber risk. The truth is, in some ways, managing your cyber risk is a lot like managing your weight. And this is something I'm very sensitive to because, incidentally, I'm in a boot. So I'm just a sloth these days. So I'm constantly thinking about this. Those, in the security field generally understand that there is best practice, and it's consistent, right? It's things like manage your attack surface, have a system to patch your software, avoid using end-of-life software, use multi-factor authentication, train your teams to detect spear phishing, avoid clicking on suspicious links. And the data bears out that that actually we are often exploited through just basic cyber hygiene could dramatically reduce the number of incidents that we see. So Arctic Wolf released a report a couple months ago, I think it's this year, where they found that threat actors exploited a vulnerability about 60%, or when they exploited a vulnerability, rather, 60% of those incidents were vulnerabilities that were known in 2022 or earlier. And this was for 2023. So that means that there were businesses that were attacked using vulnerabilities that were known, but those vulnerabilities went unpatched for months or years. And this gets back to it depends on the business, right? So Coalition works with small, mid, and enterprise level businesses, those that have revenues up to the 5 billion per year mark. Smaller businesses, just you may have your IT department or your security department may be one person, it may be half a person, right? So in those cases, I think, depending on your risk profile, if you're a dentist's office, then you probably are going to want to invest in outsourcing some security services. If you're a florist, maybe you care a little bit less and the implications of a disruption are less. But I think there's basic cyber hygiene we all understand, we all know how to do, or at least we all know what we should be doing. And then we can always take advantage of outsourcing some of our security when necessary.
Finally, a question that we ask everybody. Should there be a ban on ransom payments?
No. And the reason is, if I could just explain, a payment ban without meaningful progress to bolster security maturity broadly is more likely to backfire. And that's because a payment ban only responds to one symptom of, our complex digital security problem. The thing that I'm the most worried about that I talk about in policy circles is, beyond re-victimizing victims of cybercrime, right? The most concerning risk for me as a national security professional is that, I think a ban is more likely to paint a target on our critical infrastructure, ironically, potentially increasing attacks on the very infrastructure we want to protect. And that's because any ban will come with exceptions for exigency. And it will be our most critical services that are the most likely to get those exceptions. And it won't be long before threat actors see that pattern and they adapt and they begin to target the infrastructure that our policies are really intended to protect. So I think it's dangerous now. I also think it's responsive to a symptom of a broader problem. And there's so much more for us to do as individuals, as businesses, as governments.
And with that, I'd like to thank you, Sezaneh, for taking the time to join us today. And as always, we thank our listeners for tuning in. To stay up to date on the latest in cybersecurity, be sure to subscribe to our podcast.
Thanks.
Thank you.